$80 and it held it this week. Let's talk some commodities with Bill Baruch, president of Blue Line Futures, or at least start our conversation there on a Friday. Great to have you here, Bill. How about WTI holding $80 finally?
Yeah, it's a nice move. It's been able to hold. I mean, every time we've kind of spiked up there, it's dissipated. The interesting thing is today's the expiration of the April options on futures, and then the April futures fall off next week. I like to see this sort of range break during this expiration period and potentially get a little follow through. Maybe this can stick. I think. I mean, the IEA is saying that the market's gonna be in pretty steep deficit given OPEC plus cuts, and they think they'll extend those cuts till year end. Big draw on gasoline earlier in the week too. Some decent fundamentals working in favor here as well.
Now, the potential price action from here, how do you think about that? If the fundamentals are there too, I mean, what could we be looking at here for crude?
Yeah, we were playing this bullishly, just very lightly in our CTA with Blue Creek Capital Management that I manage. Just some really low risk outright calls, try to see if we can't get above $80. Roll that into some call spreads that are going out in a month into May, 85, 90, still fairly cheap. Kind of see if we get some follow through in the early part of this next week. If we don't, then maybe step aside, because there's a lot of damage, when you get above there. It's nice seeing it break this range, but there's a lot of damage in the 80s. I still think it's pretty good. I mean, seasonally, you know, everybody says summer is the time, but really it's the strength into Memorial Weekend is really what you want to see.
Okay. All right. So the seasonality element coming back in. That's right. I forgot. It's warming up here. Going to be spring pretty soon. Does it have the power to lift the commodity basket as a whole? It's got help from copper right now.
I don't think it's crude. It's crude oil leading. Really, it's gold. I mean, gold's leading right now,
yeah, fair.
And copper's following. So gold's had a big breakout to new record highs, and it's stuck. It hasn't been a stuck the landing. I mean, it's staying up there. It's not reversing course. Typically, if gold's being the leader here, you see silver and copper follow. And it's nice to have real fundamentals bringing a tailwind to copper as well. The smelters in China announced that they are going to cut their production, which reduces the supply of copper, for EVs, building, et cetera. But the reason why mainly is because the lack of raw material. So, this is a big tailwind to copper, and it was quietly talked about, rumored last week they'll do this. You started to see copper move up a bit. We own the name Southern Copper at our registered investment advisor, RIA, and that's a good. We added to that this week. We added in January. We added it again as it was breaking out. And seeing some of the lift in a name like Southern Copper, seeing the lift in copper as well, as we you could say this could be a buy the rumor, sell the news, and it wasn't. We've gotten follow through each of the last 3 days, which is just really tremendous to see. Copper now significantly and decisively out of $4. This is a new regime here, I think.
Does this fit in with the data we got this week? Will we be having more 22-like conversations about inflation over the coming weeks, you think?
It's two numbers. 3 is a trend. And I was talking to Ben about that earlier this week on their morning show, that I want to see 3 as a trend. Now, I think I'm not going to sit here and say inflation matters less, but I think the focus is more about jobs right now. And we've seen the difference from job seekers or job switchers and current wage growth. That has narrowed. I think that's a good thing to showing that the market's not as tight as it was. So again, then we get a jobless claims number like we did yesterday that just shows continued resilience. So I'm really curious to see the message from the Fed. Their entire thing is going to probably push back on this on rate cuts because of the sticky inflation we've had. And overall though, it's at the end of the day, the core PCE came in at 2.8%, and the Fed funds rate's at 5.5%. If they want a recession, they leave it at that. So I think the Fed funds rate is going to have to come back down, and the market's catching up to these outsized expectations that were there in January, where 6 cuts, 7 cuts being priced in. The market is now reverted back. 4 cuts is only at a 30% probability now. So that's really through the year end of the year. So that's important that the market is now finding a good balance. Inflation, though, coming back to that, it really matters. But are we going to get that third number? I lean the fact that we'll see it dissipate again in March.
All right, I like that 3 as a rule. I can get on board with that. Some kind of standard, chart agreements, gap for charts. All right, 3 a trend. I'm on board with it. So we give ourselves one more look. Hey, Bill, as we pushed back the cut odds further into the summer, does that explain some of the stuff we're talking about here, the firming of commodities? Does it also give us a reason why some of our higher beta stuff this week stalled out? I mean, it wasn't a bad week for the NASDAQ, but we did slip. Bitcoin couldn't quite punch through and hold the 70-ish. We're back below there right now. What are you thinking?
Yeah, I mean, gold did not take out the high that we saw last week, but silver extended its gains. And yeah, we've seen some stocks. I mean, unless outside of Oracle, I don't think many tech stocks have extended. Microsoft as well, though. But outside of that, I don't think we've seen any names really extend gains from the more from the tech end of things. And yeah, the high beta is sort of eroding. Yeah, I mean, it's really tough to say right now, but I'm finding the trend is my friend. Let's get through this options expiration here today. I think you're seeing a lot of wonkiness. This is traditionally a quarterly expiration. It's going to be very wonky. I'm curious to see what kind of foot we find Monday, and as we move through the Fed meeting, and just really staying nimble and open-minded to the message that we get, the dot plot, and how the market's going to receive that.
All right, great stuff. Always a pleasure. Thank you, Bill Baruch. Have a great weekend.
Thank you.